enabled.
Kotak Mutual Fund presents Invest Mentor in association with Network 18.
Hello and welcome to this special show. Kotak Mutual Fund presents Invest Mentor in association with Network 18, an investor education initiative by Kotak Mahindra Mutual Fund. I'm Surabhi Upadhyay. Today on the show, we will discuss two specific fund categories, mid-caps and thematic funds. Now, what sort of investors perhaps should look at these funds? Who is best suited for them? What should be your risk profile and investment horizon if indeed you want to opt for these funds? And how will they fit in with your overall diversified mutual fund portfolio? To discuss this and more, we have with us today Pankaj Tibrewal, Senior Executive Vice President and Fund Manager Equity at Kotak Mahindra AMC, as well as Anshul Saigal, EVP and Head Portfolio Management at Kotak Mahindra AMC. Gentlemen, great to have you in this conversation because we're looking at two very different, exciting categories as we're going a little more granular in our journey into understanding the world of mutual funds. Now, first things first, let me take a broader question with both of you. So, Pankaj, if I ask you, it's always about investing in the equity market via a diversified basket of funds. So, my first basic question is going to be, how does one decide whether you're just better off with one big flexi cap category or one large cap, or one mid cap? And how does one decide whether you actually need some of these other products, more niche products that an AMC offers?
I think depending on what the risk appetite of the investor is, what is the goal of the investor towards the end, I think will decide the what kind of funds the investor would like to have. Anybody who is a beginner for the mutual funds, they should start with slightly risk-averse products, maybe a debt product, then move to slowly a balanced advantage, a dynamic equity kind of a product, then graduate itself to maybe a hybrid aggressive kind of a product, and then to a diversified funds. Once he's comfortable with all kind of risk and the volatility around it, then probably at some point of time, the thematic and sectoral funds should form a part of the portfolio. So clearly it depends on what is the risk appetite, what is the investment horizon, and what is the end goal the investor is targeting.
So let's bring Anshul into the conversation as well. Anshul, you tell us, when you talk to a lot of your clients and they come from different sort of, profiles, different risk categories as well. What's the overall thought? Just leave it to the fund manager in the form of, say, a flexi cap fund, or do some of these newer, if not newer, let's say more niche categories, do they also merit attention?
Surabhi, as Pankaj mentioned, an investment in equities is a function of one's own risk appetite and end goals. Now, if you're, and also in what, at what stage of your investment, sort of horizon are you? Assuming that you're starting out as an investor, clearly, you have to first gain some experience in the investing world before you start taking bets on sectoral funds or on thematic funds. And in that context, I would say that given a client's inclination as also time to invest in the markets, a client should leave investment decisions to of course the fund managers. And in the first instance, it should be plain vanilla, simple investments in equities rather than sectoral and thematic funds. And for that reason, we would advise clients who are starting out in the markets to first be invested in the flexi cap, more regular plain vanilla sort of investments, rather than slightly complex sectoral funds, etc. And then as they graduate more, they understand more the markets, they can start looking at more sectoral thematic funds. Another thing to take into account here is that for any investor in the markets, a sectoral fund or a thematic fund is almost like art. You buy art if you're, if you appreciate the art. In this case, you have to appreciate the end goal of a thematic fund. For instance, if you're an investor in a finance or a banking and finance fund, which is a sectoral fund, you have to be convinced about the opportunity that that fund offers you. And so you should be taking that call basis your understanding of that opportunity and the end, keeping the end goal in mind.
Sure.
But if you're not convinced about that, then it's better to be invested in more flexi cap, plain vanilla sort of investments.
Okay, we will come to thematic funds in a bit because some of them sort of do look very interesting. The question is, how do you go about it and how do you decide whether it's good enough or right for you? But first, mid caps, because that is a big category that we all really want to be a part of. So, Pankaj, here's the question. Help us first understand and define the subset itself, because SEBI itself has very clear definitions of what is a mid cap, right? So, what is this set? And then what kind of additional risk or volatility should an investor be prepared for if he or she is looking at a mid-cap fund versus, let's say, a large cap?
In 2018, SEBI came with a uniform definition of large caps, mid caps, and small caps, which is applicable to all the fund houses. The way they define is that the top 100 companies by market cap are classified as large caps. Companies from 101 to 250th in terms of market cap are defined as mid cap, and anything above 250 is defined as small caps. So clearly, you have a definition now which is uniform across all the fund houses. And in mid cap funds, you need to have minimum 65% allocation at any point of time to this set called mid caps, which is 101 to 250. The rest 35% can be a combination of large caps, small caps, and cash. So that's the definition for all the viewers in terms of what is a mid cap as defined by SEBI. And this definition in terms of list keeps getting revised every 6 months. And there's a new list which comes up every 6 months where the changes depending on market caps is built into. Now coming to mid cap funds, I think over longer periods of time in Indian stock markets, we have seen that mid caps generally tend to deliver higher returns over large caps. But interim, there's a lot of volatility, and there are a lot of drawdowns. Take for example 2008-9, mid caps corrected by more than 70-80%. Then 2013 tapering tantrum came. We saw a very sharp correction. January 2018 till March 2020 till the pandemic, you saw mid and small caps underperforming the larger caps by almost 30-40%. So there could be periods where mid caps go through sharp underperformance. And hence any investor who is coming in this space needs to be at least be sure that he's there for, or he or she is there for minimum 5 to 7 years from an investment horizon perspective.
Sure.
Also because the space tends to be slightly more volatile, they need to be aware that there will be volatility along the way in terms of wealth creation, but the end result could be good. And we have seen time and again, and 8 out of 11 years in the past, mid caps tend to outperform large caps, and they need to have a stomach to digest the volatility along the way.
Sure.
So I think these funds are rewarding, the sector is rewarding, but again with the caveat that volatility in the near to medium term could be high.
Anshul, let me get your opinion because Pankaj gave us some nice examples from the past as well when volatility hit 2013 and right before the pandemic. But then we remember what happened in 2006, 7 and 8 up till the global crisis struck. That's when mid caps were really flowering. So is there any reason to assume that generally if the economy is doing well, then mid-cap funds tend to outperform? I mean, should one even try and draw such a parallel? And the reason I ask you is very simple, because right now everybody is talking about whether India is now again looking at a big structural recovery going forward.
There are 2 points to note here, Surabhi. One is the liquidity in mid caps, as in the stocks, and the second is the economic activity on the ground. Generally, mid and small caps are more linked to economic activity. If economic activity compresses, you see a ripple effect in the prices of small and mid caps. In addition, if market liquidity is a little, I would say, strained, again, you see that impact playing out disproportionately in mid and small caps because these are relatively less liquid names as compared to the large caps. And a small amount of liquidity being pulled out of these stocks can impact the stocks disproportionately. And it is for that reason that in times of drawdown or weakness in the markets, you see, as Pankaj mentioned, those times that he mentioned, the taper tantrum, 2008, Lehman crisis, as also recent 2018 to 2020. In those periods, as market liquidity was getting sucked out, you see these segments underperforming the large caps. But the same factors which work against these segments in times of strain work for them when times are good. And they lead to outperformance in these segments when times are good, both on the economic activity as also on the liquidity front. As we all know, in the recent times, small and mid caps have done reasonably well. This is after, and this is, I'm giving a recent example of after the pandemic lockdown. It is because the global central banks have eased liquidity quite disproportionately, and that has led to these stocks doing well because they are less liquid. A small amount of capital going into them leads to these stocks doing quite well, as also economic activity, as we have seen in the last 2 quarters, rebounding.
Sure.
That also is seeing an impact, a positive impact on this segment of the markets.
Got that.
So clearly, keeping these two factors in mind, economic activity as also liquidity in the markets is quite paramount in understanding the trend in small and mid caps for the future.
So Pankaj, now help us, demystify the most difficult question. How do you pick a mid-cap fund? Of course, everybody will look at their own favorite fund managers out there. But, we all remember the caveat that past performance is no reference or no measure or no guarantee for future returns, right? You could keep studying past performance of all the mid-cap funds out there, but that's not the right way to go, I'm guessing. So you tell us how to pick a good mid-cap fund.
All the investors tend to look at past returns. But the way to pick a good mid-cap fund is not only look at returns in absolute basis, but look at the risk-adjusted return. And I think this is very important in this category because the drawdowns could be very, very sharp, and we have seen in periods in the past. So a risk-adjusted return is the right way to pick out the right fund, and that should be done on a rolling basis. Normally, people tend to do point-to-point absolute returns. That hides a lot of facts, and to understand whether the fund has been more stable in nature and during drawdown periods, how has the fund behaved, whether the fund has fallen less, and that should be visible when you do a rolling return and when you do a risk adjusted return, and especially give some weightage to risk in terms of how the fund has behaved during periods of sharp drawdowns. That's number one. The second point has been that because the space tends to be very large, and you need to pick up fund houses and fund managers who have the right research team and a stable research team. And I think this goes a long way in picking up a stable mid-cap fund house or a fund manager, because over a period of time, if the team is stable, the process is right, you will tend to make less mistakes. And the space is not about getting the next multi-bagger, the next 200% return in the next 12, 18, 24 months, but how to avoid mistakes. So I think investors should try and do these kinds of things rather than only looking at absolute past returns, and make sure that they focus on risk adjusted and rolling returns. And I think you will be able to search the right mid-cap fund for your portfolio.
Okay, that's a great starting point. I think that's a lot of food for thought for all those who are watching this conversation. Let's do one thing. We'll take a break on that note. We'll come back on the other side and turn the focus to the next interesting category, thematic funds. What are they all about? We'll be back with that in just a bit.
Kotak Mutual Fund presents Invest Mentor in association with Network 18. Kotak Mutual Fund presents Invest Mentor in association with Network 18.
Welcome back. You are watching Kotak Mutual Fund presents Invest Mentor in association with Network 18. I'm Surabhi Upadhyay. Well, we will now turn the focus on this whole category of funds called thematic funds. As the name suggests, this could be a mutual fund constructed around a certain investment theme. It could be a pickup in the economy. It could be focused on, let's say, renewable energy. It could be on consumption. It could be on any theme. If I get it right, Pankaj, first of all, there is no restriction as such, right? The theme can be defined by the AMC.
Yes, absolutely. Thematic funds are funds where stocks and sectors are aligned to a theme. And uh, obviously, when one launches a fund, you define a theme and the sectors and the stock which will form a part of the theme. And obviously, after approval from the regulators, you go and launch that fund. So clearly, thematic funds are more broad-based. They are more, less risky than a pure sectoral funds, and they tend to be less concentrated compared to a sectoral funds. So yes, there's no, any themes which a fund house can think probably could be good from a medium to long term can form part of that portfolio.
Okay. Anshul, let me ask you, because over the years we've seen some examples. I mean, consumption is one sort of loose area around which several mutual funds came out with funds. And now, of course, there's ESG, this whole big international wave of environment, social governance. I mean, that's a completely big concept which is coming here to India as well. But you tell us, over the couple of years that you've observed the market and products, have themes, investment-specific themes made sense to you?
Surabhi, over the years, the market has shown that there are certain segments of the markets which tend to outperform in certain pockets of time. And if you are able to catch these trends before time, there is a lot of money to be made in those segments. For instance, if we were to go back, say, to 2018, and from then look at various segments of the market's performance till date, you will notice that segments in the tech space as also in the pharma and healthcare space have outperformed the broader markets by quite a margin. And when I say tech, they don't necessarily have to be the IT segment. They can be related segments also. For instance, R&D companies, or they could be companies catering to certain pockets of technology in various other sectors. And all of those combined have kind of outperformed the markets in these segments versus the broader markets. Now, if you caught that theme beforehand, obviously, you would have outperformed the markets. And in a time when the markets were going down, you would have made absolute returns. So themes do work. If you can understand certain segments and you can catch these themes before time, generally there is a lot of money to be made.
Pankaj, I guess the only counter I can think of immediately is that if a certain theme is expected to do well, then even a diversified mutual fund, stock picker or a manager, even he or she might have their eye on that theme, right? So then why go in for a specific fund to track it or to play on it?
Absolutely, Sulbi. I mean, you're bang on. If a theme is in the spotlight and is expected to do well, the diversified equity fund manager will also have a portion of that theme play out in the portfolio. But in case you want a complete concentration of that theme, then probably thematic funds make sense. And so let's be clear that thematic funds or sectoral funds can't be core portion of your portfolio. They can be at best satellite portion of your portfolio. The core portion of the portfolio still on the equity side should be formed by large cap, flexi cap, mid and small cap funds. And thematic and sectoral funds at best could be, a satellite portion of your portfolio. And any investor should understand the risk also associated. In the near term, the theme or the sector may be in flavor, but if it goes out of flavor, you can't blame that fund house or fund manager that the fund has underperformed the broader market because the theme has not been in flavor. So it comes with its own risk. Investors should understand the risk part of that element and then only invest. But be very clear that it has to be satellite, not core part of your portfolio.
Well, there we have it. Pankaj, any final thoughts? Quick last take, any advice you'd want to give to investors in both the categories we've discussed today, mid caps as well as thematic funds?
No, so the only food of thought is that, and the only advice to all your viewers and investors is that don't get carried away by any theme or any category of funds looking at just the near term past performance. What investors need to keep in mind their own risk appetite. How much volatility can they digest in this journey of wealth creation? And hence decide your asset allocation. Also, mid cap funds tend to be higher, in terms of volatility. So the investment horizon needs to be minimum 5 to 7 years. And in that, there will be, ups and downs. So be ready for that. And over the longer periods of time, we have seen that this category and the broader market in India tends to create far better returns than large caps over a period of time. And always remember, Rome was not built in a day. So large caps also were not created today or yesterday. Every large cap had a journey which started with a small cap, migrated to mid, and then large, and then mega cap. So obviously, this category will be rewarding over a longer periods of time.
Okay, wise words there, Pankaj. Yes, and definitely points that one should perhaps keep in mind as we're looking forward to going ahead on our investment journey. So that's it on this episode. Thank you to both Pankaj and Anshul for educating us and telling us a little more about mid-cap as well as thematic funds. We leave it there for this week, but do stay tuned because more interesting conversations on mutual funds coming up ahead.
Kotak Mutual Fund presents Invest Mentor in association with Network 18.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Focus. Ideate. Innovate. Enable.